Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. I'm here with
Dan Hussey.
As usual, we've got some stuff to cover, some market movement here. Not all of it great, but we're going to dive right in and talk about grain and livestock markets today. Want to update you on what is going on and what we see so that we can best navigate these types of market movements. Dan, it's going to be a beautiful week here or weekend here in the Midwest. Maybe some rain scheduled for this evening, but it looks like that's it, huh? What do you guys got going on?
You know, one of those weekends I have nothing on the docket, and that feels great.
Great.
Count
right.
just gonna relax with two kids and a wife. I think having nothing planned is like the dream, right? That's the goal.
Maybe take a nap.
Ooh, catch up on the sleep. Yeah. I mean, I'm bored. I'm in that boring phase of my life. How about you? You got anything cool going on? Any adventures?
Same story. No adventures. I don't have anything. And something always pops up, right? We just don't know.
Has the car blown up yet?
No, car seems to be trucking along just great. Yeah, 378,000 miles. I couldn't be happier. That's a funny thing. Yeah, no doubt about it. No work on the car this weekend. How about that?
Well, there you go. Now that's a nice thing to have to be able to say.
A rare auto maintenance free weekend for me. Before we start, we want to let you know that if you're interested in hearing about grain market movement daily, you can sign up for our Ag Hedge hotline hosted by expert market strategist Ted Seifert. Totally free. It gives you the chance to connect with us personally if you have any specific questions about the markets or agricultural commodities in general. If you are interested in learning more about how this price action works and how to make this price action work for you, it is a perfect way to take a first step. Link is in the description below to sign up for that. Again, totally free, zero commitment. I was speaking with somebody who had listened in yesterday and thought they heard Ted say that he thought today's price action in beans would go a long way toward giving us an idea, giving us a clue about price action as we go further into the week. Now, you've got month end, Dan.
We don't want to hear that.
Yeah, right.
How we close, right?
Like, month end we've got going on, and so you would expect to see some changes here. Negative price action in corn and beans, positive price action in spring wheat. Chicago wheat kind of lackluster, not really going along for the ride. Cattle look like maybe some profit taking there. Where should we begin, Dan, with our technical look, you think, today?
Let's rip the Band-Aid off on soybeans. You know, it's our big red down day. It was the day that, like Ted had mentioned, that, oh no, if this sets a tone, you know, for the next couple of weeks or for the next cycle, you know, what happens? Remarkably, July beans still holding that 1040 figure, you know, as support. We didn't break below it. Okay, so there's a little win and silver lining, like, to be said there, I guess. And that's a pretty supportive area going all the way back through April. So, you know, once we scurried back above that 100-day moving average in April, started testing that 200-day and have solidly stayed above the 50 and 55-day here since May, that's really the technical level I see holding. So I'm still cautiously optimistic. Soybeans, like you said, maybe just saw some profit taking and a little bit of a burner here into the end of the month. Remember, next week we start off here with June 1st. And maybe June 1st is hunting out a low in the chart. And that doesn't necessarily mean it has to go all the way down to contract lows. Maybe that low is into this 1040 figure, a little move below it to kind of create that expanding megaphone-like structure. I guess I should probably share the chart so you can see exactly what I mean there.
Let's get a little context. We opened the week at 1061 and a quarter. The high was 1067 and 3/4, low 1040. As you mentioned, closed the week right on those lows. Not a great look, 1041 and 3/4. That's down 18.5 on the week on what appears to be at this moment in time, decent volume. Yeah.
Yes. Yeah, correct. And you've got that closed right back down to 1040 or into that 1040 area. The real question is, do you break below that 1050 low or that 1040 low, that 55-day moving average? Do we head down towards that 1036 area. This I see two trend lines on this chart, right? There's that expanding kind of megaphone structure. Do we test this lower bounds of that supportive zone? That's down towards the 1030 area. Something to look out for here into the start of May.
That is an interesting chart that you see, that we do see from time to time over the past couple of years, where you've got range expansion to the upside, full on breakout fails, you rally back toward the breakout. Now you've got range expansion to the downside.
Yep.
Fella can't
Clear
stay
levels
long.
on both sides, right? That you go through, you can see the acceleration lower or higher, right? But here we are, the market's it's ping-ponging, building energy to break, right? One way or the other.
I think I saw Hightower describe these type of trading affair markets when demand driven episodes, where when you rally up, you cut off the demand, you have to fall apart to bring price back down, to bring the demand back in. Demand comes back in, you run back up to the top of the range, which I thought was a pretty nice explanation for what we have, a pretty politically correct explanation for what we have been seeing here. That absolute breakout, which was then immediately thwarted. This chart, to me, sort of speaks to maybe the change that we've seen in the weather forecasting, where folks had been predicting a beginning, something, I think, double digit corn market. I thought 23, 26% of the corn market still in drought, according to the latest drought map. But so here you have maybe well-known weather group sort of capitulating, and folks might want to fact check me on that because I don't follow them every day. But well-known weather group talking about the Gulf moisture valve opening, and that's going to present a pretty moist picture for this corn and bean growing areas here in the United States as we come into some heat. And maybe that's what we're seeing here, Dan, as the market recognizes that no risk premium is needed in the bean market at this moment in time. And quite the contrary, funds could maybe jump back on that short side. They've been long here in varying degrees, and now maybe headed for the short side of the ledger.
Yeah, and I think it plays into some of that seasonality you mentioned, right? Unless we get that major weather scare, you're talking about premium coming out of price here, generally speaking, over and over and over again. I was actually just kind of looking at, there we go. Yeah, just kind of looking at these weather forecasts here, right? But wanted to at least show, right, that 6 to 10 day forecast.
First week in June, above.
Look, we're getting rain,
likely
right?
above heat as well.
Right, above 6 to 10 day here, above precip. 8 to 14 day is above on that precip figure as well, right? Across every corn belt, right? Just everything is supposed to have good moisture. And then you start getting some heat units here, right? And certainly in the eastern. The western is a little bit below, but I think they could use a little bit of stress release right now, considering the dryness we've had out west. So I think you see a market that's trying to price in, some good weather here going right into the next key part of the growing season, right? Once that seed's in the ground, you start to see this decent precipitation with some good heat units. I mean, what more could a guy ask for a good start to a growing season? It's, I think, worth pointing out here that last week or so here, right across the country, we've had actually decent rains, particularly across Oklahoma and Kansas, where we were worried about some of that moisture and precipitation. Early rains throughout the rest of the growing belt have allowed seed to get into the ground. And now getting these sprinkles of just 1 to 2 inches across the Midwest, just everywhere you look, right? That's perfect. To me, that's the perfect amount of rain right now. And I think, markets and charts, I think it's worth pointing out that there's a reason we're seeing that. We haven't seen, a major spread or a change here, right, in that drought condition in some places. But hey, we still technically are in drought conditions, across a good portion of the central belt. I would wonder, though, right, how this is going to change into next week if this 1 to 2 inches continues, right? I think where you saw those problem spots that got rain and throughout the rest of the Midwest here, this drought map into next week is going to, I think, substantially change and see some improvement. And I'm worried some of the price action we saw today was reflective of that, which, hey, is a reason to talk about a little bit of weather now and then.
Interesting that chart doesn't really imply the difficulty they've had in the southern parts of Illinois, Indiana, and Ohio. Millions of acres yet unplanted. I would guess that with open weather, that those guys are going to knock that out here pretty quick, right? Wouldn't you think?
You would think so.
Any further delay, if you get delays out into the next couple of weeks, I was told the other night by a gentleman who lives in that area, then you start talking about reductions in yield. But I think if they knock that out in the next couple of days, we should maybe be okay. It's interesting. It's interesting to see those delays because of rain, and the kind of a lot of folks had mudded some stuff in, and now we're waiting to see it better rain, right? It better
right,
rain.
yeah, right. It's always we want the better race.
Yeah. How about let's take a look at July corn. Not another one with not something that we really are super excited to look at, but let's jump right in. July corn.
And there's, I think, a rejection there on the chart there at that old upward sloping trend line that was support, now resistance. Not a great look there coming out of last week's price action back below that 18-day. How'd we do on the week, Joe?
We opened at 459. The high was 463. Low was 443. Closed at 444. Not terrific. Down 15.5 on the week. And Dan, you look at that weekly chart, which we'd be excused if we didn't look at a weekly chart regularly, but that is beginning to shape up as some consolidation as the market gets comfortable here in this range, looking toward maybe lower prices. I cannot help but look at this chart and think that it's, even though we're down here, it's still a bit heavy. And I realize that we're weather dependent. And if it happens to stop raining, or if you happen to get some sort of big, beautiful trade deal come out from behind the scenes, that could make a huge difference. But technically, we look like they would like to challenge that low from 2 weeks ago and maybe even 430. Wouldn't you agree?
I would agree. And I think that that's a problem here in the short term for the corn market, right? You challenge this low, how far down the rabbit hole can it go from there? And that's the unfortunate reality of this kind of bear flag consolidation below some of these major technicals.
Really decent export sales announcements in the last couple of days in an environment where the rumor mill was suggesting that cargoes could be canceled. And then you show up with some pretty big numbers for unknown and other export market participants. But there's no question when you look at this December corn chart, and let me switch back over to July. But when you look at this July corn chart, that we ran up into that 462, which I believe was the 200-day moving average, right? It just fell right off below all the other moving averages. And if you're going to get a change, the one thing that you would point out is maybe we're doing this digging for a low on declining volume. And so we're always interested to watch volume change in relation to price. And if you're getting declining volume here and then volume does pick up and price action to the upside picks up, maybe then that speaks to a bottom. But where we are right here, not a great look.
No, you could say that again.
Yeah. And so it's kind of tough because we're looking to, people say, okay, well, what do we do now? Well, we're not profitable and prospects, at least in the near term, don't look great. What do we do? And so it's a difficult choice for a lot of people at this moment in time, I would think.
Yeah, it is. But there's still, I think, a threshold here, levels to think about being protected against, right? In case we do turn over. Certainly, there's ways of utilizing options and other strategies that guys like Joe and I can talk to you about to still either get some sales done or position yourself for some reownership to the upside, right? It's all dependent on what you need at this point in time in terms of a well-rounded marketing plan. So that can mean a lot of different things for a lot of guys. I know we can just go back to like where we were a few weeks ago, a couple months now at Commodity Classic, talking with a lot of guys about how sold we've gotten already so early in the year. And it started to really look like people had done some good sales at some good prices. And objectively now we're just kind of hoping what we still have, right, are still could get that one more run higher. That doesn't mean you should leave that last little bit just wagging there without any kind of protection to the downside, especially when there's a pretty clear technical level. 440 on July corn here, December corn below 435. It starts to look a lot more bearish, and the chart opens up to the downside, unfortunately, right? So while we're above those levels, I think we can hold your breath a little bit, but for the time being, yeah, you got to make a plan for the worst case scenarios, right?
I would say July wheat in Chicago No great shakes. We opened the week at 543.5 July wheat. High was 544, low was 526 3/4. The close 534.5, down about 8.5. But Dan, if we switch that chart to
You want a weekly?
pulling it up, if we pull that up to some spring wheat, boy, that gets a little spunkier, doesn't it? Spring wheat opened the week, formerly known as Minneapolis wheat, 605 open for the week. The high was 627, low was 595.5, closed at 625.5, up 19. Tale of two cities there. You say
not 10 of that today, what a move.
Right. Beautiful week in Minneapolis wheat. Dryness in China. They're having some trouble with their wheat production areas. A lot of discussion about export amounts from Russia and Ukraine, and some question about how that works in the middle of a war. I saw some guys talking on the internet, pretty timely. Enjoyed that conversation. But here we have a legitimate upside breakout in Minneapolis wheat. What are we going to do about Chicago? You say buy in Minneapolis, sell in Chicago, you think?
It seems like there's been some of that protein trade going on. I mean, even the KC Chicago wheat was bull spread a little bit here today, but the spring wheat obviously has come back better bid after today's price action. I mean, this is a quick move right up into that 200-day moving average for the spring wheat. A little bit of a head and shoulders pattern inverted here, right? Now you got this head, maybe a little bit of a neckline. You can't rule out a pull back towards $6, right? Hey, that's been the range we've been in. We haven't really cleared 630 to think we could extend to 670 just yet. But I'm not saying be a seller here, but hey, if you were hanging on, hoping for a move higher in the spring wheat, well, you kind of just got it. They're right up into the kind of known resistance area, that 625 to 630.
It sure looks great, doesn't it?
Yeah. I mean, it looks good. Good technical development. Don't be unexpected. A little bit of a pullback, but got to wonder if you can buy the dip here for move higher still. And we'll see spring wheat, see if it can't continue to lead the way.
Let's jump back to the products and beans. Oil chart shows you the kind of disappointment that we have here for not getting this RVO announcement. Talk overnight that the White House is ready to offer relief to all these small refiners that are still jammed up from the RIN situation. That's a little outside of my pay grade, but bean oil market says we do not like.
Says no, thank you.
49.35 open, high was 50.18, low was 46.43, closed 46.39. That's down 2.46 in July. Bean oil, not a great look on the weekly chart.
No.
Daily, anything here that saves this?
I hate you're picking up volume here the last 3 days as you're gapping and breaking lower below major levels after a failed breakout. This is called, some people refer to this as a unicorn. You get this as the unicorn's head. It's a short structure. It's kind of like a head and shoulders, honestly. You just have a shoulder, or head, neckline break just happened today. And that's something to be aware of here on this bean oil. It looks, unfortunately, right? It looks like we took out that net line.
So what do you got here? 52.48 to 47.30 something. Man, oh man. So you could just, or were we talking on the measurement?
We're right.
42. My goodness.
Yeah, so you're already back down right into the 55 and 100-day moving average. The 200-day below us is your next logical level. That's also kind of the lows from April around that area, around that 44.60 area. Yeah, you're right back down into channel support, and I think we still have farther to go. I don't think today is the end of the downside. I think it's going to want to unwind down to this 45 to 44 area and test that bigger support. Below there, though, down to 42s, man, right? That's where we began this rally from. And you hate to say it, but below that still contract low down there at 38's not out of the question if this is all just part of a consolidated structure before another like lower, instead of being what we thought it could be, which was this kind of nesting, building higher highs and higher lows. You really don't want to see that 42 swing take out if that still remains the case.
So if we get that 5.6 number that the market has been looking for, bean oil's got to rally, wouldn't you think?
Yeah, and I think you watch for a technical break back to fill this gap and back above that 18-day before you get bullish again, though. I could see even in a bear market, a move back there and a move lower, but moving back above the 48 to 49 area, establishing some support there. I think with some positive news, you could be right back up to 54th in a hurry. Don't get me wrong, but this type of momentum with increasing volume to the downside and structurally looks like, right? Oh, this could get ugly here for a hot moment.
And so, again, as we always point out, predicting the future rather difficult, but
No, impossible.
not difficult to
It doesn't
predict
exist.
the future or what will happen if you are taking positions here in these markets and they're not covered. So if you have to do something with futures, probably wouldn't hurt to price some options to make sure that you're covered up a bit, right?
Absolutely, right? Like situations like bean oil here, where we have this nasty gap lower. If you were holding futures, this is a prime example of where maybe an option you're so bullish, you just got to be long bean oil. So you went home long yesterday, and we settled up there 48.35. I mean, there's nothing you could do. We opened at 47.78. That stings in the futures. Utilizing options and other strategies that have limited downside can negate some of that type of event risk. And hey, discussions we can have with you at any point in time on how to utilize those other more complex products out there, right? That maybe you don't know how to wrap your head around. That's what Joe and I are here for.
How about soybean meal? We opened the week at 296. The high was 298.90, low 292.50, closed at 296.30, which is not bad considering just a 0.1 change on the week. Kind of went around the
Right.
block.
The way this chart looks like, any day that's not down is a huge win on this chart.
Right? And you and I have largely in the last couple of weeks proclaimed soy meal to never be good again. But we did discuss a bit of the ability of commodities to market themselves with lower prices. And all of a sudden, you're starting to see some soy meal exports. And if that is the beginning of a trend in export business, because our soy meal is attractive, that would be a great thing.
It would be. And the technical development on this chart is kind of what I would refer to as like an ending diagonal Elliott wave structure, but it's this just loss of momentum and grinding into a support or resistance level that eventually can't break. And what you end up with is you run out of sellers of meal. And meal has gotten so beat down that no one's selling at these prices. And you're pretty much just going to be left with just people to buy it and just people left buying it back. Buying back shorts, buying what they need commercially. And like you said, Joe, the American prices on these goods have now come back to competitive international levels that, okay, let's go demand, right? Let's see it. And you're starting to. So a positive development today, right? Closing back above that 18-day moving average, a little bit of doji. They tried to get back above that 55-day. I'm a lot more excited about this chart back above 300, obviously. And certainly back above the 200 or the 100 and 200-day moving averages at 305 and 312 respectively. But at some point, I do think there's going to be that nice short covering rally again. And you just got to kind of timing is everything, I guess, with a chart when it looks like this.
Technical facts, unable to get below the lows from
it's divergence there, as we would call it, right?
Yeah, the inability to get below those lows. Positive sign in a market that has not offered any positive signs in quite a while. And so I guess we'll take what we can get. We have established some new trade deals within the context of older trading relationships. And that could mean more meal moving out of this country to folks that are doing business with us, I would think.
Certainly.
What? Oh,
cattle.
Yeah. How about some cattle, huh?
Cattle.
So this is my big question of the week. So just to get this out of the way, June cattle coming up on first notice day next week, I think next Friday.
Yes, I think that's accurate.
Open this week in June cattle at 216.15. The high was 217.50, low 212.50. Closed the week at 215.47.5. Down just 32.5. Could be that June cattle no longer has the volume or the open interest, but this chart I think is answering or asking a few questions. Help me get through this. So we had big break off of what turned out to be allegedly a fake news release crafted to look like it came from the USDA. And
we also had interesting releases from other places right before the open on that day too.
Right. And I get that secondhand, right? That's the internet.
We all do, right?
I haven't seen any of that personally, but big drop in cattle that lasted for most of a morning and then right back up. Am I right about that?
Yeah, you are right about that. Although, I mean, sort of, right? We started off strong and we dropped back towards the 18-day, right? Is that what you said?
Well, what I'm saying is that big drop took place today,
Oh,
Friday,
yeah,
Thursday was
and we're right
Tuesday.
back up.
Tuesday as
Yeah,
we came into the week post holiday.
and today you printed above that high. Yeah,
And technical fact, as of yet, unable to get below that low, which
right.
was a higher low from the previous 2-day break. And so you have what is to me is developing as kind of a consolidative pattern and some pretty clear signposts. That big break, not only could we not get to the previous low, but we didn't stay in the bottom end of the range that day. We have since taken out the high from that day. Today's price action, end of the month. And this is my question to you, Dan. You look at today's daily chart, you say, okay, end of the month, how many of these $300 tie wearing guys from New York are going to take a few chips off the table and post a profitable trade for the month and then come back on Monday or Tuesday and put these trades right back on?
Yeah, and both fats and feeders fall into that category that Joe's kind of talking about, where we saw some strength early on the day. It was the end of the month. If you had an opportunity to take that profit and sell it, you put your two hands out, right? And that was that.
And
And
why
that's
wouldn't
probably
you?
what we saw, right? You saw
Yeah.
some back and fill. We're right back into the 18-day moving averages on both charts. I don't see any reason to think that we're not going to kind of hold up in this consolidation we've seen. And I think early next week, look for the highs of today to get taken out, to kind of maybe go with momentum perhaps, but to expect maybe that to be a signal for the move to new highs again. When I look at these two charts, it seems pretty clear. We take out today's high, we're probably gunning for that high above the highs. And look, I'm just flipping between August feeders and fats. I mean, we're looking at the same parabolic, trend. Everything about these charts is pretty much the same deal, like technically
Feeder
speaking.
cattle,
So
August feeders on the week. Let's take a look at that.
298.82 half last or into the close, right?
Yeah,
We were
open the week at 300.70 in August feeders. High was 302.25, low 293.05, 298.82 and a half on the close, just as Dan said. And that weekly bar, we took out some lows there, but back up into the trading range that we have been in for the 3 or 4 weeks. You still have that big week 2 weeks ago where we made dramatic new highs. We've come back in to the trading range that we've been in for 4 weeks, 5 weeks. Tried some downside off of that fake news release and bounced right back up. And so I believe, and again, we want to double check, but cash trading in cattle and feeders still strong. Products still strong. I'm
feeders
curious.
above 300. Where you see you got like, and as long as the cash remains up there, I think we said this last week and for the sake of sounding like a broken record, cash is up there. It's going to be really hard to see a breakdown in the futures price if we're still bid like we are in the cash markets.
And favorite cattle analyst is always beating the drum about in a non-delivery month, funds can kind of take advantage. Other participants can kind of take advantage because there isn't the delivery to sort of no bumper there to rein them in. But I would argue respectfully that if cash isn't going to turn and the product isn't going to turn and demand remains, you take your futures contracts wherever you want. We'll be waiting right here when you're done. Come on back. I mean, it's you saw it the other day, significant break off of a news item that alarmed some folks or allowed some folks to get some, who knows what kind of bad actors were at play there, but you get intraday momentum. Algos probably pick up on that and start pushing, but you still couldn't keep it down there, Dan. I mean, to me, that low from the other day is a pretty solid line in the sand. If you remain above, every day we remain above that low, right?
And let's not forget, right, that also was basically a retest of the highs from March through April. So this wasn't like a non-technical level that we pulled back into and held.
Good point.
Right. We were just pulling back to test where we held as resistance at one point. Now as support. I mean, that's how bull trends trend, folks. That's it. It's as simple as that.
They're going to open up the border. I saw a headline today. They're going to open up the border for Mexican feeder cattle before the end of the year. And so now we're walking into the middle of the year, the 6th month. And so you would be wise to continue to watch feeder cattle prices and see how that plays out. But just like you said, feels like maybe a test of the highs is probably going to happen faster than taking out these
Unless
lows.
we take out the low you talked about, right? These markets are giving us some nice technical lines in the sand to watch, to invalidate ideas in theories that we're projecting out here. And that's what trading and managing risk is all about. Just trying to identify the levels where we think risk could break down for us and taking action at them, right? If you're long, we know that 92.76 area, that 93 handle, 293 in that August feeder cattle, we don't want to see the market go below that low from a couple days ago. And figure same thing with the facts. That's an actual level in a trading plan for a guy now that you have come to that consensus.
That was my next question, is if I've got 400, 800, 1,200, 2,000 animals, and all of a sudden now this volatility's got me so I can't sleep. Guy could
put a nice plan together up here for sure.
We've sung this song. I think you and I have sung this song a couple times, right, about these puts if the market should break. But there's a real clear line there, two real clear lines where you could get some protection. I know a lot of guys are getting involved in the LRP. That's terrific, certainly proactive. But in a lot of cases, that doesn't get you all the way there. And some puts could augment that.
Yeah, and it's just, you got to remind yourself, being a commodity producer of any variety, right, agriculture or otherwise, you're in the business of selling your commodity at the best price you can. We've got some of the best prices we've seen in a while. Joe and I wouldn't be doing our job if we weren't, right, reminding a guy that is our goal. So we said our piece.
Yeah, for sure. For sure. Dan, I think that concludes our business here.
What is your favorite vacation spot from our producer, Carter, for our question of the week? Easy for me. Hilton Head Island. I'll take the Low Country in South Carolina. Good seafood. Just really easy living. Good weather. Hilton Head, South Carolina.
Yeah. Having two kids.
Beach.
Yeah. My favorite vacation spot is Whiting, Indiana. Just right next door to the refinery, there's a beach. Takes 20 minutes to drive there and spend about $100 on pizza and ice cream and make our way back 30 miles back to regular Indiana. No, I'm teasing. Boy, I think you hit the nail on the head. If you can get us to a beach or a place where they have a swim up bar, that'd be terrific. I don't think I have a favorite. I'll go anywhere.
As long as the air is warm and the air makes it cold, right?
Right. Exactly.
All right. Well, Thanks for listening to us this week on the Zaner MarketCast. If you need more because you just can't get enough of us, you can follow us on Facebook at the Zaner Ag Hedge, at Twitter and LinkedIn at the Zaner Group. If you have a question you'd like answered on the show, there's a link in the description to do just that. Just follow the instructions and we'll get it answered right here on air. Thank you again. And be sure to like, comment, and follow us to not miss a beat. And we'll be back with you as price action develops. Have a great weekend, everybody.
Have a great weekend.